Okay, so forget saying the topic. You guys can see the screen share, so I'm gonna kind of avoid doing that from now on. But first, thank you guys for showing up. People are gonna be flooding in a few minutes after. It's usually how this ends up working. But just to get the ball rolling, I'm not gonna sugarcoat nothing. I'm not gonna act like I'm talking like I haven't done this before. Like, oh, I've lived through this. I'm literally gonna speak on what I've been through, how much time I wasted, not realizing that what I'm about to talk about is what saved my path with all this trading crap. The whole idea, I mean, appropriately, I don't think people really dig into it like you should. When you hear sizing appropriately, it's kind of like size light, or like, what really does that mean? What's the definition? How would you explain it to a new trader? With me being a new trader, how can I make this work starting off so that I don't like succeed too fast and then I get so used to making big money that I don't realize if I oversize, I'm going to be right back to square one. I mean, I've seen people come in the game, make money, say 2 to 3 months in a row, like slow progress, and then they think there's some big, like, I'm untouchable. Anything I buy just goes green. They oversize, and 2 months of growth gets diminished within, I'd say, 1 to 2 weeks. Some of the time, 2 to 3 days of trading. So as I'm going through this, just like always, I hope you guys can hopefully ask questions. And if there are no questions, at least there is going to be questions I ask throughout this. This isn't going to be I'm talking and you just sit there and listen. If you choose to do that, that's perfectly fine. But I really want to get people involved, and I want to hear not really personal experiences, but just thoughts that you guys have. I know so many of you, like Mr. Trey's just said, I'm a new trader, I'm new. There's a huge difference between, like, I've only been doing this for a few years, I'm this many years old. Experience comes with, like, being uncomfortable when you trade. So many people have been doing this for 5 years and they're still trying to grow. Some people have been doing it for, not to say 3 years, and there's been no success yet. There is a purpose as to why you're not growing. It's not just, I can't do this, like, I suck at this isn't for me. I truly believe when it comes to trading or just anything in life, if you really try and put effort in, you can literally make anything happen. Like, I'm not saying you all by yourself for 10 years straight. You need mentors, you need people to guide you, you need losses along the way that's going to make you want to quit. And this is all normal. I've been there, and I'm going to speak on literally every step that I had to take. And as we go through this, I'm going to have questions that will pop up. If you want to type and respond, that's fantastic. I'm hoping to make this a little bit interactive. So just going down to the first thing, and of course, if you guys read the topics that come with the overall, like, sizing appropriately, the first thing that I really want to talk to you guys about is calculating sizing for a portfolio size. I feel like a lot of people, and I'm not even going to say furu traders or gurus, but all traders, no matter how experienced you are or how inexperienced you may think you are, the size of your portfolio, I truly believe, does not matter. If you look at it from a financial standpoint, that's when people tend to think, oh, $50, I can't do nothing with $50. Oh, $10,000, I could easily grow $10,000. People put themselves in this persona of, you can't do nothing with $50. And I feel like a lot of people feel that way because when you see on social media, you see all these big wins, you want to make, say, $1,000 a day. You will not be able to do that with a $50 account, a $100 account, even $1,000 account with proper sizing for what your portfolio size is, or what it may be moving forward. And Elson, as long as you can hear, bro, that's all that matters. There's not really much to see because I'm going to be speaking on every word that's going to be shared on my screen. So ideal sizing. What is the ideal size for any given portfolio? When I talk about this, I want you guys to realize, and I say this quote all the time, and I will type this just so it's out there and I don't have to keep repeating it. Give me a second while I do this. Okay, so this little thing I just typed, I'm gonna underline it, put it in bold. Why is that underlined? I don't know why it's underlined. So money follows, percent gains correlate. When I tell people this, it's not, oh, don't focus on money, don't focus on percent gains. It's the, like, analogy of what it truly means when you're focused on trading, when you're focused on just, like, anything basically. When you do business, the money is always going to flow in. but percent gains, the percent that you make back off revenue, whatever it may be, all of that comes with what you're doing. So as we go through these portfolio sizes, just think about, there we go. Think about this little quote or saying that I have right here. Money follows, percent gains correlate. As we go through, I'll basically like speak on this, let you guys understand what I truly mean when I say this. I literally say this to everyone that wants to learn trading, whether they're new, they've been doing it for a few years, and they're asking me like, I know I'm on the break of making this work. Like, what advice can you give me? First thing I always ask people, and a few of you may have heard this from me already if you've DM'd me or just reached out to ask for more help. Are you trading for the money, or are you really doing this because of the journey? Like, you truly love just to look at charts. You could sit for a week straight, watch the market, and not put in one single position. Do you actually want to make money, or do you just enjoy what like the benefits that come with this, or do you truly just love what you do? The reason I ask this, let's start with the $50 portfolio size. As I talk about these things, I want you guys to realize I'm going to be giving stories of people I've helped and or are currently helping, and I actually have a good little story for you guys to hear today. And my little brother, I've been teaching him for years now. He's been on and off, busy with college. He's still in school, hasn't had a full-time job yet. So I'm trying to show him like the power of compound interest, the power of what little can be with consistency, with discipline, and of course, the biggest thing which a lot of people struggle with, trusting someone to give you knowledge that you may not understand right now. I told him a few days ago over the weekend, and the week before, obviously, because depositing with ACH, it takes a few days, blah, blah, blah. I told him put in $50 and just see what happens. Because if you can grow a $50 account, you can grow a $500 account. You can grow an $1,000 account. There's no such thing as, oh, you can't do nothing with $50, or you can't do nothing with $100. But if I had 10,000, oh, I could easily trade that. Money follows, percent gains correlate. If you can't grow a $50 account, you can't grow a $1,000 account. You can't grow a $10,000 account. You can't keep and or grow in a $100,000 account. People just assume I have more money. Now I can actually make money finally. When I broke down to my brother the process of growing money and not just making it, you can't just go all in with $50. I understand that's like, well, what else am I going to buy? I only have $50. You have to understand the correlation that if you make 10% a day, sizing $10, yes, it's only $1 you're making, but making 10% on a $100 position, you're making $10. 10% on an $1,000 position, you're making $100. The money follows you. The percent gains are always going to correlate. They're always going to stay the same. As the money grows, it follows you. It doesn't like magically just build. The percent gains are always going to be the same. You size 10% of your portfolio, you make 10% back. You size 50% of your portfolio, you make 10% back. The money's going to follow no matter what percent that you go in with or you sell for a profit. So when I broke this down to him, first thing I told him, you're not going to turn this $50 into $1,000. And when I said that, of course, it's like, well, why am I going to do this? Like, it's going to take me so long. Like, I want to get this going. I said, okay, well, you have to realize if you can turn this $50 into $100, what makes you say you can't turn $100 into 200, or $200 into 400, or 400 into 800? Compound interest, 100% portfolio growth, 100% portfolio growth. The money's slowly going to follow you along that journey. Starting today, after 3 days of him trading already, he's at $99 after 3 days of trading. Proper sizing. I understand you can't really size 10%, 20% of your portfolio. The less money you have to take a higher risk based off percent gains. So I broke that down to him. You can't size 2 contracts that are worth $10 each because you're in $20. You have to learn, okay, if I go in with $10 for one contract and sell for a 50% gain, yes, it's only $5. But as you grow that account, let's say a $200 portfolio, you're sizing into this 20%, which if you guys can do the math, obviously, that's going to be a $40 position. So now think about the same thing as before. You're sized in $10 on a $50 position. You sell for 50%. You make $5. If you're sized in $40 and you make 50%, you're now going to make $20. And trust me, I get it. $20. What is $20 going to do for me? Think about how the percent gains are going to slowly correlate as that account grows very slow. I'm not saying, hang on, I got questions, you guys, my bad. I started in February this year. This is a direct message. I don't know if you want me to read this or not, but Ramin, if you don't mind if I read that, let me know before I get into that. So Mr. Trey's my brother. His birthday is actually tomorrow, and he's going to be turning 23. And I'm actually going to send him a few $100s to put into his portfolio since I saw him do this. He's listening. He's being smart. He's not being stupid like a few years back, which me and him have talked about. He's going to be turning 23 tomorrow. So Ramin said, I started in February this year and still not profitable yet. Before I finish this statement, February to now is not even a year. It took me over 3 years to start making money, not being consistent money, just making money. At the end of the week, end of the month, I'm up. I was red for years back to back. So don't think a time frame is going to make you successful or whatever you believe it could be. I know it will take time and I'm learning as I go along. Always remember, and I'm speaking on myself right now, I'm always learning. You are always going to learn, and that's just a part of the journey. Michael, he did not take Carnival. I told him not to do it because for him, it was not worth it. W Big Bro, yeah. I do my best. Yeah, happy birthday to him. I'll let you guys know when it's his birthday, you can do some stuff. But yeah, so I just told him, like, you show me you do this, I'll help you out. Because once I, like, my birthday gift, this is how I am as a person, kind of off topic. I'm going to give him $100 to add to his portfolio, which will put him at $200. And I told him, once you get that $200 to $300, you're going to withdraw the 100 that I gave you to trade with. That's your birthday present. You can do as you wish because you made that $100 happen. I'm very big on monetary value with things, and he would rather learn at this stage in life than just get clothes, shoes, whatever it may be. So I'm slowly trying to teach him what is possible with little money, because a lot of people nowadays, like I told you guys earlier, they think you need $500, $1,000 to start. You have to learn. You learn before you make money. You're going to lose before you make money. This is not his first time ever trading. He's been known about all this for years now. I used to help him when I was barely making it. And as I got better and better, he started to realize, okay, I want to get back into this. And I told him, when you're ready, I'm going to be here 2 years from now, 3 years, 4 years, whatever it may be. And now I'm hoping that he can slowly grow, let the money follow, let the percent gains correlate. That's what I've been telling him. So switching over to a $500 position portfolio now, this is when you can actually start to size proper with how I look at it: 10% account, 15% account, 20% account. When you size in the positions, as you make money, you can actually not have to put in 30%, 40%. You have to take that risk starting off, unless you want to buy in for a $5 contract, whatever it may be, but you're not going to make $20 on a $5 contract every single time. You'll have to take those base hits, $5 back, $3, $2. I mean, today my brother sold for like a $6 profit and he was freaking out. Like, I just made 30%. He didn't care about the $6. It was, I just made 30%. If I would have put in $100, I would have made $30. So he's starting to realize this can grow. He doesn't care about the money. He's focused on a year from now, 5 years from now, because he's understanding this is a journey. It's all about growth. And I'm hoping you guys can picture this as I'm giving you, like, what is happening in my life right now, real life examples for you to really comprehend this. So having a $500 portfolio, the biggest thing I tell people, I recommend sizing 10% for normal sizing. The reason I say that is only because it saves you big losses that will affect you. When you lose $100 on a $500 position, that's going to mess with you, realizing I just had $500, I'm down to 400. You're focused on making it back. You need to realize if you can make $50, $5, $10 back to back to back to back, do the same thing with this 10% sizing. as you grow to a $1,000 account. So take the same thing as above. When you're sizing 10% of your portfolio, now when you have $1,000 account, you're able to size in $100. If you take that $500 portfolio and you're sizing 10%, which is a $50 position, not a lot, I get that. Say you profit only, I'm not going to say a dollar amount. I don't like when people talk about that. Let's say 25%. So you someone's going to point that out. 25% you profit. When profiting 25% on a $50 position, you're making $25 back. When you add that $25 to your $500 portfolio, you're now going to be at $525 off of a $50 position size. I understand it's not a lot, yada, yada, yada. Think about the transition of where you could be in a year or so. The biggest thing I like to tell people, add a zero to everything you do. If you size $50, act like you're in $500. That way, when you're up 25%, aka 25, oh my God, I'm not doing the math right. Someone probably said that without me even thinking about it. There we go. I thought someone was going to say something. Okay, so you profit $12.50. Someone probably said that and I didn't read it. So when you make 25% on a $50 position, you're making $12.50 back. Think about adding a zero. Okay, I only have $500 in my portfolio. Let's imagine I have $5,000. Yes, I'm only sizing $50. Let's think like it's $500 that I'm sized in right now. Okay, I'm selling at 25%. You're only making $12.50, but think about if you were sized in an extra zero behind that. You just made $125. Think about where you could be and not where you are right now. Realize the journey you have ahead and the growth that is going to come with that. It's going to be rough. It's very slow. I completely understand. I've been there. I've risked sizing $400 on a $500 position, sold at 50% loss. Now my account's down to $300. I've been there. I understand how it feels. Once you take that idea out of your head, the growth, the compound interest, you learn how to size appropriately. You learn how to make this work with who you want to be down the road, not just who you want to be today, not who you want to be next week. I know so many people that blow accounts, reload it, blow account, reload it. And then they're just like, I don't know what I'm doing wrong. And then they tell me like, oh, well, I'm sizing $800 on a $1,000 position. I just want to make back everything I've lost. One loss on a size that heavy, you're back, what, 2 weeks of work. Slow growth, just the size heavy and lose all that. Took you 2 weeks to get to where you're at. And then one trade, you're backtracking 2 weeks within one day. It's mentally draining. It's not the fact you lost money. It's the fact that now you have to get that money back. That's how people think all the time. So as you grow that portfolio, $1,000 portfolio, sizing 10%, now you're in with $100. Maybe 3 weeks ago, 3 months ago, whatever it may be, you were just at $200 in your portfolio, sizing only $40. Now you're at 1,000, sizing half the amount percent-wise, but you're going in with $100 now. There is nothing wrong with putting in $100 and only making, let's say, 20% gains off this. And yes, oh my gosh, I made $20. Like, woo, what's that going to do for me? Think about that long term. You risked very small. The most you would have lost in that size was $100. 10% of your portfolio was the max loss. You just made a 2% gain on your portfolio. I understand 10% loss to make 2% back. That's horrible, whatever. How many times, and I want you guys to answer this question, if you don't mind, how many times have you been up in a trade, let's just say 20%, 30%, and you never sold? And the next thing you know, you're red, you sell for a slight loss, you sell for 2% gains, you sell for a 20% loss. I have literally, if I would have sold every position, and Jarvis and I talk about this, well, we used to all the time when I first was like introduced to them and they brought me in. If I would have sold every time when I was up 10%, 20%, 30%, I mean, I'm trying not to cuss, but like even 50%, I would probably have 9 wins out of every 10 trades. I would lose one time probably. I got so greedy wanting that 3-digit percent gain, that 200% gain. When I realized, okay, if I'm hitting 20% 9 out of 10 times, why am I not taking that gain? And yes, I get it. It's only 20%. I could make 100. I sold early and it ran to 100%. You're hoping and you're wanting that I deserve, or I should have that by now. What do you really deserve if you're not growing in the process? If you're not learning from the mistakes? People are up 20%, it goes down 50%, then it's back to green. They sell for 10% because it's like, I was just down so much. I don't want to hold this in green in case it comes back. I'll be content this time. If you're making 20% in a day, how many banks give you 20% growth on an account within, say, 10 years, 5 years? You're doing this in one day. Like, just process that real quick. I'm going to keep talking, obviously, but just really like digest what I just said there. If your money is sitting in a savings account, checking account, even a 401k, whatever you want to say, you're making 20% in a day, possibly. What is there to be like unpleased about with that? Is it people you're seeing make 100%? Is it seeing people make $5,000 on a 10% gain because they have so much size and positions? You're letting outside information, outside scenarios affect where you currently are. Those people, I guarantee, were in the same steps as you 5-10 years ago, and they dealt with it. They overcame it, and now they're reaping what they sowed 5-10 years ago because they dealt with the fact they had to grow slow, and I used to be in the same position. The fact that I'm able to trade any account and make money, 100% growth in a week, 100% growth in 2 weeks, it didn't just happen. I do it. It's nice. It took me 3+ years to actually understand how in the heck to do that stuff. And I know a lot of people, and I'm looking at the chat right now. My bad, guys. Let me just read through this real quick. Yeah, everyone said Bear Trap got me. I didn't say anything. Love that. Recommend the safest strategy is 0D to E to him. You guys are making jokes right now. Yeah, man, this is the shit I need to get. Yeah, so literally, like, I'm spending, it's been it's been almost 25 minutes already. I want you guys to really understand you're not going to get rich quick. And if you do, how are you going to keep it? You know how many times I went in with $2,000? This is like years ago. I mean, now if I do it, I withdraw because I understand I just made 5,000 a day off of a 2,000 size, 1,000 size, making 4,000. I'm not going to keep the money in my portfolio because no one just makes 400% like that. I'm not saying it's luck, but your execution, your patience, your diamond hands, whatever you guys want to call it, you have to be so secure with what you're doing to trust that. And I personally don't have that much trust in myself to keep a 400% gain in my portfolio. I'm going to withdraw because nothing like that just happens. I want to reap what I just sowed. I deserve to pay myself, and I deserve to see that in my account that I can do whatever with, pay bills, go out and get a nice dinner for what I just did. I don't just want to keep in my portfolio because what am I really gaining if I can't just take that money out and put it in my hand? Every dollar you make in your portfolio still is not your money yet. And I feel like a lot of people, all they like to show is, oh, I made this much today. Okay, well, like, why don't you withdraw? Like, then you actually made that money. Until you withdraw it, that money is not yours. It's just there to trade with. And when I tell people that, I understand it's rough, whatever it could be, but I love speaking on that. I did not used to be that way even a year ago. I would make money and keep it, want to grow it more. Slowly it just diminish. So now as I make money, I pay myself so that I feel the success of what I just did. And it's not even the fact of like, I have less money to trade with now. If I can make 4,000 like that with $1,000 size, I don't need, say, $15,000 in my portfolio if I'm sizing that light. So as long as I'm content with what I have, I don't need to grow what I could potentially lose. That way, if I'm back down to where I started after a huge gain and say I make a mistake, I do something stupid, I can just reload the port and not lose money and then try and make it back. It's like basically reinvesting in myself from what I just did. And of course, as you grow, I'm going to slowly get into the 3,000, the 5,000, the 10,000. This is when you have more room to play. You can size the same as $1,000 account. Say you go in $100. If you go in with $100 on a $3,000 account, the overall perspective that I like to look at is percent gain wise. If you lose $100 on a $3,000 account, you're not even losing 1% of that. or it's about 3%. You're not losing 10% like you would on $1,000 account. You're only losing 3%, 3.3%, whatever it may be. Some people are able to deal with that. But if you can't even size, say $100 or $200 when your account gets this big, and you hold it down 50%, down 60%, and you're still shaking, like, I can't hold this, you don't really deserve to size up yet. You're still working on the emotional side. Are you just trading for the money? Are you just trading to try and get back what you could have lost historically or whatever it may be? That's how I tend to really see how people deal with their emotions. The fact of, okay, I'm going to put in $30 and I have, let's say, $2,000 portfolio, hold to zero, hold it to minus 99% and see if you're able to do that. Many people are so stuck on, I don't want to lose $30. I'd rather just sell for a 50% loss. Okay, well, like, how do you think you're going to deal with the fact of having, now we're going to slowly move down to a $5,000 account. You can size $500, which is 10% of that portfolio. That's what I usually recommend for people, 10% sizing. So sizing 10% on a $5,000 portfolio, it's going to be $500. The same percents correlate if you have $1,000 account. If you have $1,000 and you're down, say, 50% on a 10% sizing, you're down $50. The percent gains are the same exact thing for this example right here. Yes, you're down more money, but that's why money follows as you grow. Yes, you're down 50%. Oh my gosh, I'm down $250. I can't handle this. It's the same thing as being down 50% when you're sizing $100. It's just more money because you're leveraging what you have. That is why growth is not very different. Like, oh, if I had $10,000, I would trade so much better. There's no difference. And I used to be one of those people thinking the same thing. Oh, if I had a $100,000 account, I would be able to size 1,000, just not care. Why can't you do that now if you only have $1,000 account? Why not be able to go all in and feel the same way? It's because you're limiting your resources. You know, if you're wrong, you're losing everything. So do the same thing, size $1,000 on a $10,000 portfolio, size $100 on a $1,000 portfolio. The percent gains are exactly the same, but as you grow, the money's going to follow you. That's why I always tell people, if you can't size or grow in $1,000 account, grow it to 2,000, withdraw back to 1,000, grow it to 3,000, withdraw it back to 2,000. As you do that, you learn how to make money work for you. You're not working to get that money because you understand this could take a week. It could take a few more weeks, could take a month, a year. But as you grow $1,000 account and you grow to a $10,000, you're not going to be stressing about, oh, I lost 500 today, because you understand $500 loss on a $10,000 portfolio. That's what, 5% loss that you just had. Is that really going to stress you out to the point of this is horrible? If you're looking at it from this perspective right here, like, man, I just lost $500 today. That could take an effect on you. But this 5% loss on your total portfolio is the same exact thing as having a 5% portfolio loss on a $1,000 account. You're down $50 on the day. There is no difference from the percent correlation wise. The money amount is going to be more. You have to comprehend that. That is why I always tell people proper sizing now is not going to be an issue as you grow with a port, with your knowledge, whatever it may be. I got some people asking some stuff. Answer, I withdraw every week now. That's perfect. Even if you're up $200 on the week, withdraw the $200. It shows that you did something, that you have proof that you made money. Alberto, say you're up 500 on the week, Friday 0 DTE comes up. What would be smart to risk with the profit? So that all comes down to the individual. So for me personally, if I'm up, say, $1,000 on the week and Friday's coming up, I usually only like to risk 10 to 20% of my profits, but that doesn't mean only put in $100 a position. It just means if I size $500, my stop loss has to be 20% loss at the most, because that's what correlates to $100. For me, I don't like to risk my entire profits for the week. If I'm feeling ballsy or like I got this, the most that I ever risk on profits is about 50%. So if I'm up $500, I'll risk about $250. That's just how I am. If the setup is there, I'll risk it. But you also have to realize Fridays with 0 DTE for Tesla, Amazon, Apple, whatever stock it may be, You can size $100 and that contract can easily go 500% in a day. So risking $100 to make 500, why put in 500 bucks and then sell for 20% because you're freaking out if you're wrong? You can size less and trust the move and let that move happen. Let the chart work its way out, and you're sizing less because you're letting the faith go into the chart. You're not watching P&L. But end of the day, it all depends on the individual, basically. So moving down to another question I have for you guys. How can you manage risk given the fact of less money equals smaller gains? I basically just reviewed all that to you guys. So you don't really have to answer a question, but I just want you to think about managing risk. Just because you have less money, it doesn't mean, oh, smaller gains. I can't deal with this. It's going to take too long. I have to size heavier. That's the whole purpose of like trading, I guess you can say. Like the purpose of growth, compound interest. As the account grows, I'm going back to the same saying, money is going to follow you. The percent gains are always going to correlate. That's just the way it is. And if you can't deal with that, you're going to have to oversize. And if you are wrong, you are going to reap like what you sow. Oversizing and being wrong, you're going to take a major loss. Sizing light and being wrong, it's just a little chip on the shoulder you got to wipe off and just restart the next day. A lot of people can't handle a major loss, and that's why they usually never size heavy. But if they do, they always sell for a 10% gain or a 10% loss because they don't want to hold too long and risk where they're at, whether it's being red a little bit and losing more money, or being slightly green and then back to red, slightly green again. And then they're just like, I just want to get out. It's too stressful. I can't afford to lose this position. Sizing light gives you a chance to let the chart do the work, not just you freak out over what could be of the position. 3,700, you said my account is close to 300 now. How should I size? So personally, I would recommend only trading stocks that move slow and adding time, whether it be, I mentioned these a lot, Ford, American Airlines, Carnival, Peloton, PTON, PLTR, Delta. I mean, just cheap contract stocks. A lot of the time with new traders that have small accounts, I recommend buying 2+ week out and buying a contract that's like $20 to $30 a piece. Only because if you can make money on those positions and slowly grow the account, as you grow, you can leverage more into each position. So if your success rate is, say, 8 wins, 2 losses, and those 2 losses only take you back 2 wins. So you have 6 wins that are giving you growth moving forward. Those 2 losses take out 2 of your wins. So overall, you're profitable. 6 out of 10 times, you're going to grow the account. So using that as you get more money in the account, you can put in more contracts for your position, size heavier, because going off your historical data of success, you know size and heavy is not going to be an issue if you trust what you've been doing. Follow the same execution, follow the same plan. And said, currently I use 5 to 10% per trade. Usually I don't even use 10% as I'm still learning. Nick said, what's your profit target? He's basically asking you, Ange, like, how much do you look to make on these positions? And if you don't mind me speaking, I'm pretty sure it's what I've been talking to you about. He plays the chart and he sells when the chart tells him to. He doesn't just say, oh, I'm up 20%, I'm going to get out. Ange has learned if I execute, say, a drop happens to a heavy support zone, he's entering calls because he knows if the chart holds value historically like it has, the stock should bounce. So he enters calls, the stock slowly moves up, he sees the momentum building, he can choose when to sell at that point. He doesn't have a goal in mind before entering, but he probably has, like, if it goes this high at any point, I'm not holding for more. I'm taking a profit, and that's my goal for the day. 37 said, yeah, that's what I used to do, always size heavy just to make it all back. Never think you have to make it all back in a day. I understand it feels good. It makes everything work out better. Comprehend the fact that you're trading for the long term. I understand, oh, I can make 10,000 a day if I'm right. You have to risk to make that much. You have to really grasp the fact, do you just want to do this for a year? Do you just want to do this for a few weeks, a month? People like me that want this to be a full-time thing and make this a career, like this is what I live off of. I'm not going to risk that, because if I lose, it's not the fact that I lost a trade. I literally lost finances that I can't afford to lose. You have to treat this like a job. You have to treat this more than just, I don't want to say a game, but like, I'm just going to throw money in and see what happens. If you can afford to do that, That's proper sizing. But if you're just throwing money in because, oh, I'm bored, I just want to put some positions in, you're basically asking for, okay, I could win or lose, but whatever happens, happens. I treat every day like a career. I have to show up, I have to wait, and I only put money in where I'm comfortable putting it in. I don't care about the potential. I only want to get into what I know as a system works and what I know historically has been my fortitude, basically. Roy said that Coca-Cola, KO is a perfect stock to play as well. Swing number day trade. So if you add time to a position, 3,700, you can swing them, but you also have to realize what is the chart presenting to you. If you're adding time to positions and you're sizing accordingly, you don't have to really worry about, oh, I got to get out today. When you trust a chart, like I've talked about in the previous lessons, you're not trading for a profit. You're entering off a chart and you're trusting what you see and not what you're possibly going to get out of it. As you play the chart, you learn, okay, we're approaching my first resistance. If we hold here for a while, it shows weakness and buying pressure. This may not keep going in my direction. I'm going to sell here because I don't want to risk a possible pullback. Some people like the risk. They want to see if it goes higher. Maybe they size for it so they can afford to do it. If you're at a small account, you have to take those base hits. You have to take those 20% gains, 30% gains. When you add time to contracts, you're more than likely not going to make 1,000% in a day off that position. If you're playing zero DTE, it's a lot higher risk. So you will make percents bigger, but you're also going to lose a lot quicker if you're wrong. Deepak said, my gain is small, loss is big, help me. When I play, usually my day expiration will be 5 to 7 days. So my biggest thing about gains are small, losses are big. You really have to figure out, and this is when journaling for me comes into play. I always journal if I'm mentally stuck or mentally off path of what I should be doing. I try and get back onto the idea, my strong-tude, whatever you want to say, fortitude of like what makes me successful. Because when I'm having losses after losses, I'm doing something wrong. It's not the fact that chart's just not working. There's something that's not working, because if I'm overall 80% success rate and I'm having 5 back-to-back losses, I'm not really clicking with what's happening. So when you're having major losses and only small wins, maybe you're buying too high up on calls, and then those pullbacks don't give you enough room to let the stock move upside. A lot of the time when I was first starting, I would just buy blindly. I'd be down 20%, 30%, back up to being down 20%, down 10%. And then once I hit green, it's like, I was red so long, now I'm green. I don't want to hold this in the green just in case. It was more so I would just give up on the trust I had before letting the chart give me more like confidence into why I should hold that longer. And that's when I figured out, for me, I started sizing less to understand why I was even in a position. Like, what could the chart do that the P&L would not make my mind switch on a decision I would make? So my best advice, learn to size light. Because if you're making, say you size $500 and your risk is $100, just size $100 and realize if this goes to minus 99%, I'm taking the same loss financially as I would with the $500 position, cutting at $100 loss. Understand that you are trading a chart, and you have to really understand and process, why are you even in this? A lot of these things only move off of price action, off of heavy zones. People use indicators, they use tape, they use all these things that help them in their specialty. For me, what I use, everyone's different. I'm just speaking on myself. I'm not saying this is the only right way. This is just how I am as a trader. I wait for heavy supports for calls. I wait to see how heavy resistance work to get puts. I don't just buy in blindly when the levels touch. I need confirmation. The longer I wait, the cheaper the contracts are going to get. So I'm not in a rush. And if I miss the move, quote unquote, miss the move, I don't look at it as I missed. It just didn't give me the setup that I wait for. Does that make sense to everybody? Rushing a trade is not going to do anything knowledge-wise, because first of all, you rushed what you knew you shouldn't. If you made money, that's fine. But the growth is what I personally want for myself, not just, oh, I made $1,000 today. When I go back to process why I entered, why I sold, why the chart looked good to me, what am I learning from that position? Yes, I made money, but if there's no knowledge to gain, it's not going to work every time. It was basically a hopeful trade that worked out in my favor. And I don't like dealing with that kind of stuff for me personally. Ange said, usually I'm up good. I still keep going and use EMAs to understand trends is intact or not. That is a strategy I also use. Also, I sometimes use stop loss if I need to go somewhere. I care more about my risk to reward position sizing in the chart. Always use stop losses when in profit. I know a lot of people, it's like, well, I want to give it room. Like I'm up 50%. I can afford to let it go back to break even. Understand the fact of 20% growth from a position is amazing. So if you're up 50% and you just want to see the chart work out, stop loss at 20% gains, you are guaranteed at the worst possibility to make 20%. And a lot of people are like, oh, well, what if my stop loss gets hit and then it runs to 100%? Okay, well, then you have to risk letting it go back to break even, risk letting it go to red after being up 50%. You have to find a solid ground to basically make a system for yourself. Trading is repetitive. The market's not going to be repetitive, but your system has to be repetitive. If you're up 50%, I always put a stop loss at 20%. You have to follow that. If it hits at 20%, think about all the times, like I said earlier, you're up 30%, 40%, and you don't sell, you don't put a stop loss. If you're 9 out of 10 at hitting 20% gains, your account should easily grow 100% within a month. And 100% returns on an account in a month, a year down the road, I mean, that's a lot of money. In the moment, it's kind of like a bummer, but think about the long game, understanding the long game. While you journal, can you trade? Oh, wait. Are you asking about TradeZilla, Deepak? While you journal, can you trade Zilla helpful? Oh, you're asking if it's helpful. So me personally, you guys are talking a lot. Holy crap. Me personally, I don't use TradeZilla. I literally have a Google Doc that I use. I write on paper. I'm very hands-on. It's very difficult for me to process things if it's all automatically transmitted into a document for me. So I am very like, I take time out of my day to recap what I do. That's just how I am as a learner. Everyone's a different learner, visual, hands-on, out loud, whatever it may be. I'm personally, I have to do it myself. Longer you wait, cheaper the contract will be. Yes, longer you wait, the cheaper the contract. There's no rush. And yeah, the Netflix we talked about. Mr. Trade is not gonna lie, these markets are changing every week, not for the best beginners, but it is what it is. Also realize the harder it is now, the easier it will be as it pans out back to normal. I'm not saying we're going to get back to normal in the market, but just please realize if you're a new trader and you're able to just keep an account with money in it, you're better than 90% of the people out there. If you don't trade every day, you have more discipline than 90% of the people out there. Really process that. You don't have to trade every day to make this a successful day. I've gone a week straight, never trading, but I sat here because what I need to see just doesn't happen. There's no rush. There's no purpose to make something happen if what you know you need to see doesn't align. That's a huge discipline factor people need to realize. If you got time to watch the charts, you can take profits at 50% and reload at the break-even point if it gets to that, of course. CJ, exactly. If someone is up 50% in a trade, you can sell for 50% and say it comes back down to where you initially bought the contract. I'm not saying just buy in because, oh, I sold for 50, it's back to my initial buy-in, I'm going to do it again. See what the chart is showing you. A lot of the time, if time is progressing, the stock will not be at the exact same point of a bounce for the contract to be the same value. It may be slightly higher, it may be slightly lower. So you have to realize, is the chart showing strength for this position to be ran back through again? Ange, is this not a normal market? This market, every market is normal for the current conditions because as they change, that's considered normal. I mean, a year ago, this was not the same market. 2 years before that, not the same market. The dot-com bubble, not the same market. As we grow as a trader, we readjust to the market. We don't readjust ourselves. We readjust to the market, with the market. Your strategy is not going to work nonstop for the rest of time. That's why as the market changes, you have to figure out, what am I doing wrong that I need to fix to make this work in the current conditions we are in? That's one of the hardest things for people to realize, because being comfortable is human nature. When you're uncomfortable, there's growth you're going through. So whenever I'm trading, I want to be uncomfortable, not from like I'm oversizing, I feel uncomfortable, but the fact of I need to find a way to make this work better. There's always room for improvement. And when I get comfortable, I know that I'm basically digging a hole for a major loss coming my way. So I try and always readjust my strategies. I don't change my strategies. I just readjust with what's going on in front of me. Yeah, so I kind of spoke on that, but yeah, the market right now, I don't want to say it's normal, but it's like I was saying, every market is normal in the time it's in. This is a normal market, but if you're talking about a year ago, you're comparing the differences. This is not a normal market. I mean, we're in a bull market, we're approaching all-time highs. A year ago, this was not normal, but going off the pre-COVID boom from when Trump first got elected, this is a normal market because that was the same conditions where you just buy calls and let the market do its thing. We're in the same conditions 5 to 6 years ago. As of now, this is unusual for new traders because when they came in 2020, 2021, it was straight downside, straight chop, whatever it may be. So it's not really, is the market normal? It's who's interpreting what they're seeing. For me, this is just the market. The market's always abnormal for me. I don't look at the market like a game. I look at it like a statistical, like reasoning. Why is this happening? Where's the levels? It's all about processing what you see and not what's going to happen. You react to what goes on and make your positions. Or if you're sizing correctly, you buy in to what you believe is going to happen in front of you. For me, I like the reactions as to what's going to happen. So moving on to the last topic for you guys, understanding the long game. This has obviously been talked about throughout this lesson, whatever you want to call it. So these questions that I want, if you guys want to respond, that's fine. If you just want to sit there and just process what this question could mean to you as a person, have you really processed growth looking 1 year down the road? Have you really thought about what growth looks like for you if you're looking a year down the road? A lot of people, it's like, oh, I have $1,000. I could be a millionaire if I just hit big plays. From a logical perspective, have you really thought about, okay, if I can make, I've talked about this last time, if I can make 50% account growth in a month for a year, where am I really sitting at? So just to give you guys a quick visual, I don't want to speak on this too long so I can like have a conversation afterwards before this class ends. Let's just say, because I know a lot of people don't have a lot of money, and I use this example all the time. You have $1,000 portfolio, and say you're doing 50% account growth every month. So going off this, obviously the first month, it's like, I only made $250. That's horrible, whatever. I understand that. Making $250 is not a lot, but I'm going to pull up my calculator because I don't want to do every month the growth. But for a whole year, you start January with $500. Every month, you're making your account grow 50%. I know people that can do this in a day, in a week. I'm just giving you a month. So if you do this for a whole year, 50% account growth. First month, $750. Second, 1,125. 3, 4, 5, 6. After 6 months, you're just under $6,000. 7, 8, 9, 10, 11, 12. After a whole year of doing 50% account growth, you are basically sitting at $64,000 in your account, making 50% account growth a month. I'm not saying shoot for 50%, but when you size correctly and trades happen to go in your favor, for a quick example, say you size, like you don't want to only size 10%. You want to take a little bit of a risk. So let's say you size $100 for a position. And let's just say you added a month of time, you're letting the chart do its thing. This stock had a nice breakout. You're letting the chart continuation do its thing. You make 100% returns off this position. This one play is going to get your account to $600. You just made $100 off of $100 sizing in one day. Okay, let's say you swung it for a week. In 1 week, you made $100. You're only $150 away from hitting that goal of $750. Does that make sense to you guys? Light sizing, letting the chart work its way out. You're basically $100 on the way to getting 50% account growth in a month. If you size $500 and you sell for a 20% loss, now you're down $100. A lot of people chase that. They want to get it back. Focus on the growth that comes with this. You could be in a whole different lifestyle situation if you just trust a year down the road, 2 years down the road. That's how this game works if you want this to work long term. So many people. Oh, is it 77,000, Elson? Let me do that math real quick. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 60, 64. You may have done an extra one on accident. The first month doesn't count. That goes in the month 2. But I mean, anyways, over 60,000, over 50,000, over 10,000. Think about that. You started with $500. You just made, let's say you only get to 5 to 50,000 in a year. You just made, what is that? $49,500. Some people don't make that at a 9 to 5 job in a year. You started with $500. I'm pretty sure anyone can save that much money after, I don't want to say a month because it is hard for people, but say in 6 months, you can put aside $500. And if you just slowly grow that account, trust the process, you could have an extra 50,000 in your lap within a year time. 1 year out of a potential 60-year life that you may have, 80-year life, 100-year life. Then think about the potential of growing that account 50% every month. Compound interest plays into effect at that point. That's when you realize this can really happen for me. So how important is success to you? What is the purpose of trading for you? A lot of people, when I ask them this, it's freedom. They want the freedom to make money whenever they want, to show up whenever they want. Why do you want to rush that? Do you not, like a lot of people that understand the journey of anything, business, family, growing a family, having a kid, your kid's not going to be 18 in 1 year. Think about that. Society makes us realize what takes time. When you look at trading, it's like I'm brainwashed. It's not possible. Retail can't make it happen. Oh, you see someone making 5,000 in a day. They were in your shoes at one point, but they're not going to say that. Why would they tell you that? So when you're thinking of your purpose, do you really want this to just be a financial like kickstand for you? Or do you want to learn how to do this so that for the rest of your life, you can make money at any point in a month? You can just hop on, make $500, not come back for 2 weeks. So many people think you have to do this every single day, and you can, but you don't have to. That's the best part about trading. You are your own boss. You pull the strings. You decide, I'm going to show up today. You know what? I'm going to take 6 months off because I don't even need to do this right now. What 9 to 5 for working for a corporation, whatever it may be, I'll see you in 6 months. I'm pretty sure a lot of people, if you don't show up for a week, you're fired. Maybe even a day, you're fired. Think about the opportunities you have if you just take a year out of your life to slowly grow what you really want within a week. Do you really deserve that in a week if you just get it out of nowhere? Are you going to keep that if you just got it so quick? Learn to appreciate that. Because when I started to realize that, I would want to tell people, oh, I made $1,000 today. Aren't you proud of me? Those people don't care about the sacrifices you made, the losses you had. They're only going to want to hear the best parts about it because they're not going to comprehend those hours of studying, those late nights, the people you lost. You didn't go out to the bars on the weekends. I had a sacrifice to get to where I'm at. And I'm sitting here teaching you guys right now. Not because I have to, because I want to. I'm here because I want to do this for you. So think about that for yourself. Like, what do you really want to make out of this? Last topic, and I'm pretty sure we got about 5 minutes. This is not going to take long to talk about. One trade won't make you, but it can break you. For those of you that have full ported, you know exactly what the hell I'm talking about. Because when I say that, I got PTSD for all the, tens of hundreds of accounts I've probably blown in the past 4 to 5 years. One trade is not going to make you. And if it does make you a lot of money, you're not going to be able to keep it half the time. But that one trade of oversizing, it's going to break you, not financially, not your portfolio, but mentally. I know a lot of people, when they lost big, their mental standpoint changed with everything, not just trading, but life, their relationships. It changes who you are because it is draining. Don't let that breakthrough, I don't want to say change you as a person, but make you think, oh, I can do that. I saw someone on social media put $1,000 in, they got 10,000% returns. They just made $100,000. That is not going to happen every day, every week, every month. That is a risk that they took, and it just worked out one time. So I'm really hoping, and we have a few more minutes left. I don't want to speak on this last saying. I love this because I tell people this. It's like, I don't understand. If you have full ported before, you know exactly what this means. I do not have to explain it. If you've oversized before, you know exactly what I'm saying, and I don't have to explain it. If you have never oversized, you will never know what this means, and that is a blessing for that person. But eventually, if you oversize, you're going to know, and this saying's going to come back to you. Man, I remember hearing about this. This is what changed my perspective. Because when I would have $1,000 and I grow it to 5,000, oh, I'm feeling good today. I haven't had a loss in a week. I'm going to size $4,000. 50% down. I just lost 2,000. Now all I'm thinking about is I have a $3,000 account. I was just at 5,000. I got to get that back. I'm going to oversize again, lose again. I'm going to oversize. Okay, I hit big. I'm going to keep oversizing and get back to 5,000. There's no growth there. That hope, that what if, that, oh, imagine if this happened. I try to avoid that in any vocabulary when it comes to trading now. You mentioned it before, 77K around there. But yeah, Ellison, either way, bro, say you have 500 bucks, say you have 30,000 end of the year. If you told someone that works at a hedge fund, a financial institution, I had $500 January 1st, come December 31st, I have $30,000. They're going to look at you like, prove it. Show me you did that. It's not hard to do. I mean, if you guys want me to, I can slowly figure out the percent gains you need to make that happen. I think it's like 21%, I want to say. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. No, you need more than that. Let's do 33%. 1, 2, 3, 4, 5, 6. So if you do, let's say 33%, you have roughly $12,000 end of the year. 33% in a month account growth. I've seen you guys in the Discord do that in a day with proper sizing. 33% growth a month, starting with $500, you could have over 10,000 in your account. Yes, it's a year time making that much money, but then take that 10,000 and do 30% account growth again every month for the next year. In 2 years, think about where you'll be. 2 years out of your life. Mr. Trey, it's the hardest, but the best. No one wants to hear from the losers. I want to hear from the losers because I used to be one. So don't ever think that. The right people want to hear about the hardest time because they have come from it and they will never let that go and they don't want to go back there. People that don't talk about it, they either never had it or they don't want to portray that because it diminishes their image, maybe the status quo they have. I'm always going to speak on the worst side of what I've been through because like what I've had happen, people can't relate to that a lot of the time. So I'm showing you I'm a product of that imagination you may have. I'm the proof for you guys. Facts. They're not gonna know these Zoom sessions a lot. Yep. With $100 sizing, what would you recommend for a position? One contract at $100, two contracts at 50, four for 25. Nick, honestly, that all depends on you. Like I keep saying this, and it probably sounds cheesy. It all depends on who you are as a person. Realize sizing $100. Say you get 10 contracts at $10 a piece, you can trim along the way. If you size one contract at $100, this is how I explain this to people. And I can actually type this for you guys to see a visual because this is probably going to be a lot of numbers I'm going to say. So let's say you size $100 and you get 10 contracts. And then you size $100, you get 5 contracts. And then the one time you size $100, you only have 1 contract. Okay. So let's look at this from how I explain this to people because this is literally what made me change how I trade, how I size, how I trim. When you have, we're going to start with 1 contract. Say you're up 20%. Are you going to be more tempted to hold this contract or sell it for 20%? It's $20, guaranteed right now. You're probably going to hold. After what I talked to you about, you may take the profit now. Say you have 5 contracts. You're up 20%. This is when psychological thinking, common sense, logic comes into play. You can sell 3 of these contracts. And guess what? You still have 2 contracts left. This is when sizing with contracts is in your advantage. Because when you sell 3 contracts at 20%, you literally just locked in, obviously, $20 a contract. That's $60 you just locked in. Or am I saying that right? No, that's wrong. Someone help me out. I'm thinking too heavy right now. Yeah, so 3,700, 1 contract. Having 1 contract, you're forced to sell. I got to think about this now. Each contract's $20 when you do this, selling at 20%. That's $4 each. You're locking in 12 bucks on this position you sell. So you're locking in $12, but you have 2 contracts left. Think about only selling 1 contract for 20%. Yes, you just locked in 20 bucks, but you have no runners. So any profit that happens, nothing. Any, oh, this contract ran to 100%. I sold at 20. I missed out. You don't get to do anything with that. If you sell 3 contracts, I'm going to put this on the line below just so it's separated. Selling 3 contracts, you just locked in $12. You have 2 contracts left. What if these 2 contracts go to 100%? Now these 2 contracts by themselves are both up $20 each. The same as selling 1 contract for $20. This is when sizing with contracts and not just money standpoints, you have options. You can sell at 20%, leave runners, stop loss, break even. Once you're up 50%, I'm going to sell 1 more runner, but I'm going to keep 1 more just to be safe. If you have 10 contracts, you have so much freedom to do what you want. You can sell all of them at 20%, make $20. You can sell half at 20%, make $10 and leave the rest to go. That's when who you are as a person comes into play. For me personally, yeah, Scott just said $4 a piece. Yeah, I got that a little late. That's when, as you size, you can afford to hold runners. I'm not saying size from a money standpoint, but sizing with contract value. Hopefully that opens up your eyes a bit. Because if you have 1 contract, you're stuck between, I could take profits right now and be done. Oh, but what if I miss the move? If you have an extra contract, you can sell. Yes, you're not locking in the same as 1 contract at 20%, but you're giving yourself that, if you want to say adrenaline, that hope of this could keep going. If you sell at 20%, 3 contracts, and you put a stop loss at break even, you are guaranteed $12 right off the bat, guaranteed. As these 2 contracts run, you can sell at any point. 30% you want to get out, 40% you want to get out. You get to 100%, you can sell right there. That's when contracts work for you, and you just let them do their thing. Let the chart work its way out. Hopefully that gives you a new thing to think about. For me personally, I'd rather size 20 contracts at $100 total position than get 1 contract for $100 because I love leaving runners. I love it. Fees do add up. If you guys trade on Webull, you'll understand fees are way less for options, but having like Interactive Broker, TOS, the fees are going to be more with more contracts you buy. And that's why a lot of people, they only buy 1 contract instead of buying 10 or 20 because the fees do add up. I get that. But if you can't handle, man, I missed out on that contract going 100%, those fees will be worth it if you know your success rate of I sold at 20%, it ran to 100%. If that happens 5 out of 10 times, those fees may be worth sizing more contract-wise, but the same financial amount in the position. Yes, okay. Each contract you buy, there's a fee. For most brokers, it's about 60 cents a contract, 65 cents. For Webull, it's like, it's not usually by the contract, but on average, 5 cents a contract. I've traded 200 contract positions on Webull before, like a $6,000 position, and I was charged like $2 for all those fees. So 200 contracts for $2. That's pretty unbelievable because if I did that on Interactive Broker, I'm paying like $120 on fees for that, which is totally not what I want to do, obviously. Would you go over something you said earlier about the market changes, but your system has to be stable and adjusted to new things? How would you get a system going? So do you guys have any more questions about this topic we were talking about? Anything at all? Someone said talk about Apex. I will talk about Apex. Does Rippy have a small account challenge? We do not do challenges in the Discord, but the sizing that a few of us do are made for small accounts. You have to realize when you see someone call a contract that's worth $200 and your account's only at 500, logically from a proper sizing perspective, that is not smart to do. But if you have a risk to throw money in like that, you can afford to do it. So does anyone have any more questions about this topic or anything? If not, I'm going to speak on other stuff that you guys may have questions about. So I'll give it a few seconds just to see if someone wants to type up something real quick. can we see an example of your Excel? So here, let me